Welcome to the NISM Masterclass. I am your host Sashi Krishnan. Our purpose at NISM is capacity building for the securities market ecosystem, and as part of that purpose, we sit down with the gurus of the market and gain deeper insights and learn from their journey. And my guest today is Anup Bagchi. And Anup is the MD and CEO of ICICI Prudential Life Insurance Company. And Anup is a veteran banker. I think he spent over 3 decades, 33 years if I'm not mistaken, with the ICICI group, and has worked in retail banking, in corporate banking, in treasury, and many other areas than banking. But he has also been on the board of ICICI Pru Life, ICICI Pru AMC, and on the bank board itself. And prior to this, he was the MD and CEO of ICICI Securities. But more importantly, we at NISM are very privileged to have Anup on the board of governors of NISM. And welcome to this show, Anup. Anup, insurance, especially life insurance, is a financial product that is required by everyone. And I think nobody disputes that fact. But it is also a product that customers do not take an initiative to understand and purchase simply because insurance or buying insurance is a very rational decision. You need to tune yourself to think of a disaster. You need to tune yourself to think about death. You need to tune yourself to think that the money you're paying towards premium is not a loss. And because of all this, it's very difficult for an individual to comprehend life insurance. So how do we educate people that there is a need to buy life insurance?
No, I think, Shashi, first of all, thank you very much for having me here. I think it's a great question because that's really the crux of the matter. And life insurance, we have seen and we are trying to convert it from a negative emotion attached product to actually a responsibility product. Life insurance at the core is a responsibility product.
Right.
That you are responsible for your family, you are responsible for people loved, near and dear ones. And if you are not there, then what happens?
Right.
And while emotional void cannot be filled, at least financially that void can be filled.
Right.
And you are right about the rational part, because if you really look at other insurances that people are already buying.
Right.
For example, if you are saying that I want to buy, you are buying a motor insurance, let's say for a 1 crore car.
Right.
That is costing almost 1 lakh per annum.
Correct. And that could be more than the premium on your own life.
Correct. And if you were to take 50 lakh for 1 crore premium for, let's say, a 30-year-old guy, 10,000 rupees.
Correct.
In 50 lakh variety, it is 18 times. You're paying 18 times
Right.
more premium for your car than you would for your life.
Okay.
That is the difference between the two. So life insurance over a period of time, pure term as it is called, it's a responsibility product. And it should be seen as a responsibility product, and you for a very small premium you actually get a very high cover.
Correct.
And now with the digital ecosystems, etc., it is very easy to get. Things are very transparent.
Right.
And it is happening on the claim settlement, which I want to say that last year itself the death claim settled by life insurance industry is 50,000 crores.
Okay.
50,000 crores. Claim settlement ratios is all 98% plus for everybody.
Right.
And for large players like us, it is 99.5. So it is exaggerated that claims are not coming. It has improved tremendously over years. Tremendously over years.
So, talking about the benefits, conceptually, there are benefits like risk transfer, where, the financial uncertainty, as you rightly said, is substituted for financial certainty. And there is income replacement. For example, it guarantees replacement, as you said, in case something happens to you. There is an economic replacement that happens, and these are relatively more difficult to understand than say something as simple as return. So when you have a asset product or a mutual fund product, all we need to tell people is about return. But when we talk about risk transfer, we talk about financial certainty. How do we sort of convey these messages to individuals to make them see the importance of life insurance?
No, so I think you're right that, one should not look at it from a complicated perspective. I think one should look at it very simply. And the first question that one has to ask oneself is that, is your car more valuable than your life?
Right.
And why would you pay 17 times more, to insure your car when you can at 1/17 the cost insure your life?
Right.
Second, it is renting versus owning a house, for
Right.
example.
Right.
Most of the people rent houses. Why do they rent houses? Because it is cheaper. But when you are renting the house, after the tenure gets over, you don't get the house. It's similar in protection, that whenever you want protection and till the time corpus is built up, you just take it on rent,
Right.
pay a lower premium for that.
Right.
If you want to own, you want to get the premium back, you have return of premium products which are there. I would say that the more and more and more, and it is industry's responsibility to convey it in simple terms, put the emotion in a positive way, and really say there are four things, whatever we have spoken to 40,000, 50,000 of our own customers to figure out what you want.
Right.
Basically four things: chota premium,
Okay.
bada cover,
Right.
turant issuance,
Right.
fast claim settlement, hassle free. That's it.
Okay.
I think these are the four things that everybody should do. And the best thing to do is actually not go here and there. Now we have the Geminis and the Chat GPTs and all of it. Your query, you put it there, and you will find out that it is 17 times. You will find out what are the things to be seen in a policy. You don't have to depend on anybody. And Gen Z particularly, how they are, and that's how it should be. So I think that is how one should look at it. And more awareness is coming. We have seen post GST, now that 18% has gone, it has become more affordable. The traffic on our website and our mobile has jumped up by more than 50%.
Okay.
So clearly, I think there is a shift that we are seeing among the younger people to take this, and which is a very, very positive sign, Shashi.
So, Anup, beyond these four things which you said, I think another thing which sort of is a little difficult for individual to decide upon is the right amount of life cover they need. So, you have some simple rules which says 10x and 10x of your annual income, take that as your life cover. But you also have more complicated sort of mechanisms like human life value, need-based analysis and so on. So just for a person who needs to buy insurance, what is the right kind of cover that he should take? I mean, what should be the
No, great question, Shashi.
rules
Great
that he
question.
should use?
Great question. I think the way, first of all, every individual and every family situation is different.
Right.
So I think this simple rule of thumb, it works most of the time. I'll not say that it doesn't work.
Right.
But one should just sit and first of all think financial, as a simple product which is a responsibility product. That if I'm not there, what are the large corpuses that I want and for what?
Right.
Large corpuses that you would want is for education. Because if you're not there, then what you have to provide for the family?
Right.
So first is you have to provide for education of your children, marriage of your children, some pension because there is an income replacement, so some income for that.
The family, yeah.
For the family.
Right.
And critical illness for the family, because see, in India the highest amount of personal bankruptcy is not happening because people are taking loans. It is happening because of health.
Healthcare costs.
Any critical illness in family is bankrupting the families.
Correct.
Bankrupting the family. So what is the critical illness? Once you put it down on a piece of paper, how much you require?
So you're saying this need-based analysis need not be very complicated?
No, it is not complicated at all.
Okay.
It is not complicated at all. And so what we have seen, good customers, what they are doing on Saturdays or Sundays in an evening, they are having a family meeting for 2 hours.
Right.
And discussing this.
Okay. Oh, but isn't there an emotion attached to this? How can you discuss your own death?
So great question, Sashi. So we have seen on our site, and I'm saying this is not a small sample of 30 or 40. I'm talking of samples of 40,000 to 50,000 customers.
Right.
When do they do? Because every day with social media we are seeing some young person having a very unfortunate situation.
Correct.
Passing away, they were all fit.
Right.
Some accidents happening all across, we see that. And relatives, something happening to relative, critical. Those are the moments where people are sitting and seeing. COVID, for example, COVID was a great moment where people realized the responsibility.
Right.
Because people saw in and around people like us, having issues. And it's also a great way to also get the family together, bind the family together, pass on values to the children.
Right.
So it's a great conversation to have. See, that's the corpus building return, which has an element of greed in it.
Right.
Because there is an element of greed in it, because upside is one assumes that the upside is unlimited,
So it's
while
easier
it is
to
not.
talk about accumulation than protection.
Then protection and responsibility.
Correct.
That's what happens when I'm there.
Right.
It's a great discussion to have otherwise also. Taking the cue from there, the other thing that we see is that when people take protection or term, or they are not telling the nominees, families don't even know.
No, okay.
And so you will have unclaimed insurance.
right.
Just like you have unclaimed deposits, you have unclaimed. So that is another thing, that whenever people are taking policies, you must discuss it, because it is for them. And you are not there when thing happens. See, that's the important thing. If the policy that I have taken, I am not going to be around
Right.
for claims. So it's very important which brand you buy from, whom to contact, when to contact, what are the documents required. So that it's not a very difficult situation, but I understand, having spent so much life in finance, that it is not an area where people happily jump into.
Right.
People want to run away from that.
So Anup, let me, in this context, you seem to suggest that the best time to have this discussion is when you have family. Because you said that that's when, there are certain financial goals that will need to have
More responsibility gets added.
Correct. To be met, because, in case of an unfortunate incident, you will have to, meet the children's education and, all those kind of stuff. But then what about for a young single adult, male or female?
Shashi, so the trend there,
Right.
the trend there that we have seen is, in most situations, what is happening is that parents have spent large amount of their corpus on children's education, and they don't have much left.
Right.
Okay, and so very conversely and very counterintuitively, if something happens to the young person, parents don't
Are
have
left
the
with
corpus.
debt. Oh.
So that is the other thing that is happening. One is your own family. When you are creating a family, you just got married, now your wife and then kids are coming, those responsibilities are coming. But we are now having 3 generations of responsibility. And the parents' responsibility in most cases are also with the children. And they are the single earning member.
Right.
And that earning is not just going for your family, but it is also going for your parents. Okay. Because, in India, as you know, it is only in the last 15, 20 years that wealth have got formed. Otherwise, we didn't have that much of wealth. We didn't have corporate. All our parents, including mine and I'm sure yours, they have spent everything on our education.
Right.
That is the investment that they have made. So they don't really have corpus. So that is another trend that we are seeing for the 25. And the premiums are very, very low. For a 30-year, I'm saying 30-year people are getting married.
Right.
For a 30-year, the total premium that you have to pay for 50 lakhs, 1 crore is nothing. It is 500, 600, 700, 800 per month. 800 to 1000 per month, you get that kind of cover. So it's very cheap. If you start early, it is really very cheap.
So the message we need to get to the younger generation is that there is a need for you to look at buying into insurance.
So live your life.
Right.
Okay, but there is also a responsibility to fulfill.
Okay. So given that, it is important to buy life insurance, there are a large number of life insurance products that are available. You talked about term, but beyond term, there are endowment products, non-par products which give you guaranteed income. There are unit-linked insurance products. So how does one decide on which product is best suited for you at various stages of life, of course, right? And look, you have term insurance, or you have guaranteed, or you have ULIP. So where does that fit into your entire insurance portfolio?
Yeah. No. So I will share with you what customers do.
Okay.
Because we keep speaking to the customer, why are you buying those products?
Correct.
Not why we want to sell, because that is immaterial. Finally customers buy the product. Term is very clear why they want to buy.
Right.
Annuities are very clear why they want to buy. Why annuity? Because at the age of 60, you are most vulnerable. You don't have any other income left.
Right.
No other income is going to come from you. There they want stability. They don't want to invest too much in equity, etc. Because volatility they cannot do. Their income will get impacted.
Correct.
Now many people buy guaranteed product.
Right.
Why people buy guaranteed product? Because from taxation perspective, 2.5 lakh premium for ULIP is tax free.
Right.
5 lakhs per annum premium is tax free.
Right.
So what people do, and we are seeing that they start around 35 to 45 when they have enough surplus to tide over their immediate consumption need.
Right.
So 5 lakhs you give over 10 years, so you would have paid 50 lakhs. Then you get it compounding. Compounding, as you know, eighth wonder of the world.
Right.
And then you get a massive corpus which is tax free.
Right.
No other asset class gives you tax free.
Right.
Then we are seeing legacy planning. Because legacy planning for the next generation, how do you give it tax-free?
Right.
This is the best way to give it tax-free. So that is another place where people are accumulating and passing it on as legacy planning. Unit link why people buy. Unit link why people buy. Unit link the positive and negative, I'll say. See, all insurance products, because the effort of selling is high, the commission is higher upfront. But for the full life of the product, it favors very comfortable. It favors very favorably with mutual funds.
Okay.
Because in mutual fund, it is on AUM.
Right.
So if your corpus 100 becomes 1000 and you are getting 1%, you are giving 10% on the original premium.
Correct.
In insurance, it is only on premiums. It is not on AUM.
Right.
Okay. So over a period of time, it equalizes. But upfront is high.
Right.
So we always say that, if you don't have surplus money to pay for a longer period of time, do not buy life insurance savings products.
Okay.
If you want it for 3 years, 5 years, 2 years, 3 years, you should go for other products. And if you require great liquidity, here the liquidity is through loan against policy, or you can surrender.
Right.
But actually, there's much easier liquidity in other asset classes, like
Correct.
like term deposits, even mutual fund you can redeem.
So that's the downside. The liquidity
It's a downside. And so corpus building
but
for
the
long
upside
term.
is that because of this difficulty in liquidity, you don't take your money out so often.
In fact, if you go to the previous generation, all our parents, all government schemes are illiquid.
Right.
PF illiquid.
Right.
PPF illiquid.
Right.
Sukanya Samriddhi illiquid. Post office illiquid.
Right.
Anything which is corpus building has to be illiquid.
Right.
Liquidity, you know how it is. Only the fund managers show in return.
Right.
Investors don't make that kind of return because in and out liquidity they go. Right. So surplus money, if you have to build corpus, compound it over a period of time. There is no better product. Plus long-term guarantees only insurance companies provide.
Right.
Annuities only insurance companies provide. Those are products which are not available otherwise at all.
So, let me just pick up that tax point which you made, right? So, at some point of time in the past, I remember, we used to buy insurance only because of the tax advantages. Now, as you rightly mentioned, there are certain tax advantages that still remain for these savings products, under Section 80C, for example, or under Section 1010D for, legacy planning, etc. But from a buyer of insurance, his perspective, the perspective of a buyer of insurance, is tax still such an important part of why they would buy a savings product?
No, tax is still a very, very important. See, 80C has lost large part of its relevance.
Okay.
Now, 2.5 lakh per annum ULIP tax free.
Right.
In debt or equity.
Right.
Both. In debt, you get tax-free return on debt.
Right.
It's not available anywhere. Equity, tax-free return, no capital gains.
Right.
Up to 2.5 lakh. And 2.5 lakhs per annum amounts to, it is almost equivalent to SIP of 20,000. Not many, up to 20,000 SIPs, imagine if it becomes tax-free. That is one. Second one, as you say, 1010D. After death, it is sort of tax-free, so you can pass on legacy in a tax-free manner.
Right.
The fourth one which people don't know is there is something called MWPA, which is Married Women's Protection Act.
Okay.
Married Women's Protection Act is a very interesting thing.
Okay.
Any policy, if there is a married woman, they can assign Married Women's Protection Act onto the policy.
Okay.
No raid, nothing.
Right.
This cannot be taken away from married women. So it's a omnibus protection available to married women.
Okay.
Fifth, which now we are seeing people taking more and more, businessmen. So what is happening? I am owner of a business, 100% owner of a business.
Right.
So the policy is being bought by the company.
Right.
So now 18% GST gone, or 4.5% GST gone. Then full tax you get, tax shield you get another 25%.
Right.
And when you pay all the premiums, when I, now as an individual, if I want to take it from you, I will take it from you. How much do I have to pay? The total term premium that has to be paid.
Right.
Or whatever is the surrender value I have to pay. So it becomes a great tax saving tool, double tax saving tool for businessmen. So we are seeing now large policies being taken by businessmen. And using that policy, again, they are using it for working capital because now you have a policy.
Right.
You can borrow against that policy. Right. So they are taking it as a working capital. This is another. So our fastest growing actually are two products. Okay. Our fastest growing is this business insurance. Okay. One of the fastest growing because businessmen, chartered accountants are forever telling them, how to utilize every rupee of your capital.
Correct.
Okay, so now this is all entering. Secondly, on the ULIP side, it is protect and gain. So ULIP side, high sum assured, not 10 times, which is mandatory, 20 times, 30 times, 40 times. So for your protection, so some part of the return goes toward paying your protection.
Right.
So people are saying that I will do protect and gain. So you give me protection and you give me gains. Part of the gains, reinvest in protection. Otherwise, your first question, अरे हमने देखो पैसा दे दिया, nothing is coming back to me. All that issues are solved.
Okay.
These two are the largest. And the third largest movement is in annuity. We have a progressively increasing annuity, which is every year 5% increase.
Right.
And when we are telling our customers that you have two choices, one is equal annuity, which is most commonly known, versus every year you will get 5% increase. And for that, if you are getting 100 rupees of corpus, you have to give 130 of corpus. So in 6 years, people think that 6 years mein to 5% वापस again, and then forever it goes.
Right.
You will not believe 30% of our customers are now picking up automatically. They increased because they think that this is inflation adjusted.
Right.
Inflation every day they are seeing 2%, 3%.
Correct.
This is positive on inflation. These three
But
innovations.
the annuity doesn't have any tax advantages.
No, it doesn't have any
Yeah,
tax
so
advantage.
from a
But
tax
it is like an
advantage-
FD.
Yeah.
It is like an FD.
Exactly.
So whenever liquidity is very tight, people put in equity, FDs. Otherwise, they come here.
So, talking about these life insurance contracts, and you did talk about, step up and a lot of complicated stuff. Some of these terms are very difficult for, a lay individual to understand. Like, for example, I would understand things like sum assured, I could understand policy term, I could understand beneficiary, all that I understand. But there are a lot of other terms that, crop up when I need to look at an insurance contract. Things like no claims period, surrender value, you mentioned that yourself, claim settlement ratios. And sometimes I think people are put off because of, the complicated nature of this contract. And you said that people want something simple. That's what you told me right at the beginning. So that, that was one of those 4 things which people want, saying, give me something simple. So how do we simplify this contract?
No. First of all, you are absolutely right. And I think as an industry, as a sector, we have to do a lot of work in simplifying stuff. See, we should not expect people to buy complicated stuff or people that they don't understand. And if they try to, buy that, they feel diffident about buying. I think, but by and large, all customers should ask for 4 things. In term, they should ask how much is my cover?
Correct.
They should ask, how long do I have to pay?
Okay.
How long is the policy? Will I be covered for 25 years, 30 years, 40 years, 50 years?
Right.
4th is that if something happens to me, where should I contact for claims? And that I will get the claims. You please give me some evidence that you are settling all the claims well. So that the life insurance, anyway, it is publicly available, but you should ask. So term is very simple. Annuity is also reasonably simple. You give me a lump sum. Every month, how much will you get? Then if you want increasing, what is the increase?
Right.
50%.
Right.
Then you have 2 things. One is, if something happens to me, will you give the amount that I have given to my nominee? Or you will consume it.
Right.
That you will not give me back. If you don't give me back, I'll give you higher interest.
Right.
If I have to give back so then I have to give a lower interest. So this is about annuity. Guaranteed product, there is no issue. How much guarantee are you giving?
Okay.
There is something called benefit illustration in all policies. And I will request every viewer to go to benefit illustration. It writes down how much benefit you will get every year.
Okay.
And for how long.
Okay.
So those are guaranteed products. Now comes slightly more complicated product, which is called the endowment product.
Correct.
Which is called participating product. Think of it, most of it, like a balance advantage funds, okay, which is locked up for a long period of time, where bonuses are announced but not given. It reinvests and compounds.
Reinvests.
Okay, and in every policy you also get a cover. That's the way to understand that.
Okay.
Unit linked, everybody understands. So life insurance for savings purposes come only when you have to build corpus.
Right.
Not if you have demands for liquidity, this is not the product.
Not the product.
This is not the product. If you want to compound and you want to take emotions out, this is the product. Because you have been in the market for so long. Emotions is the biggest killer of returns.
Right.
Every time a ticker moves, people are redeeming and paying taxes.
Correct.
Okay. You should take liquidity out. You take liquidity out and compounding happens people make good money on that, and that too tax-free, and then you can meet all your life goals. So it has to be linked to a life goal, it has to be linked to responsibility. And from a numbers perspective, because we are in this, from numbers perspective, see every year, life insurance, we get almost around 9 lakh crores of premium collection.
Correct.
Which is renewal plus new business,
Right.
9 lakh crores. It is by far the largest.
Okay.
Because mutual funds, it's around 28, fantastic SIP flows,
Right.
28, 29,000. But on an average, you'll see 35 to 40,000 crores is the thing. So here the premiums that people put in for long term is absolutely brilliant. But again, I will reiterate, if you want liquidity, if you want short term, life insurance product is not the product for you. This is not the most suitable product. You can come, but it's not the most suitable product because you lose money if you have to surrender.
Right.
So you lose money if you surrender. Surrender value is nothing. It is like on redemption how much you will get.
Right.
It is written there. So just go through the policy. Now we have customer information sheet mandated by IRDA. Last
which puts
2
down
years.
the key terms and terms of the contract.
So don't go, even if you don't have to go through the policy, please go through this term.
Okay. And that will have just those 5-6 things which
And
are most
Shashi, I have figured one thing. If you don't know, ask.
Right.
Be shameless. Your money.
Right.
Your money.
So,
money.
So now I have a question to you. Now I have to ask somebody. And obviously who I need to ask is an insurance agent or a distributor. Correct? Because that's very important, because who else will I ask? I mean, he's
you go to the insurer's website.
To me.
You go to insurer's website.
Okay.
You please use ChatGPT. You please use Gemini. You please use those. First you do your homework. See, I have seen now in a slightly lighter, if there is a illness,
Right.
people are now researching
Dr. Google.
Dr. Google.
Right.
Okay, they are not going to doctor.
Right.
I am saying, see, I always say, I've been in banking, as you know, capital market.
Right.
See, my money, no. I have to be responsible. I have to ask. Unless I understand, I will not be comfortable. So ask. Anyway, Gen Zs are anyway asking.
Yeah.
So they are asking. So ask.
So, in spite of that, most people don't tend to do that.
Yes.
Because insurance is never bought, right? Insurance is sold even today.
Yes.
And therefore, there is this distributor in the loop. I mean,
Yes.
you may still resort to trying to seek information, but there is still a distributor in the loop. And I think clearly the distributors play a very important role in penetration. So how has this distribution architecture evolved? Are the agents today a lot more well informed? Are they able to communicate better with, the buyer of insurance? Are they able to sell this idea which you talked about, saying that, even though insurance costs initially are 12 to 20%, or the whole life of that insurance product, the costs actually come down. So how do they address these discomforts that customers have?
No, so I think so what we have seen, that good advisors are really very good. In fact, the best financial planners, all our top advisors, I will not say even top advisors, mid advisors,
Right.
they're selling all products first of all.
Okay.
So they're truly financial planners for the family.
Right.
And they understand responsibility and they are able to communicate this.
Right.
And the good positive thing that has happened in the industry, at least I have completed 2 years, but I've been watching this industry for long, is that persistency has improved. Persistency is that, 13 months, how many people pay, etc. That has been improving. Claim settlement ratio is really, really very good.
Right.
50,000 crores of death claims have been settled.
Right.
Okay. Advisors will tell you what they think you would need.
Right.
But I will always request everybody that whatever you want to seek, you should also ask, and advisors will tell you.
Right.
And advisors do tell.
Right.
And advisors do have a very good quality book in general. They have very high persistency, very low claims. They tell the customers to disclose properly. So I think it is okay. I think the issue in life insurance comes because of illiquidity. If there is a claims on liquidity, then where to go?
Correct.
That becomes an issue, which is why I always say that if you have surplus money, put here and you will not regret.
So the Gen X, Gen Z, Gen Alpha, etc., the new sort of generations that we need to target, because we want people to buy insurance when they are young. obviously are resorting more and more to digital channels.
Yes.
Want to get information, but are they also using it to onboard?
Yes.
Are they also using it for, availing of the various services that they need to get? And why I ask you this question is simply because, internet actually lends itself for high frequency transactions. This is a very low frequency transaction. You pay a premium once a year. So, are digital channels actually so very popular now?
So first of all, there is, like I said, that the traffic to us on the digital channel has been increasing consistently.
Okay.
I mean, not just 1 year. I mean, 2 year trend. If you see, it is much higher than rest of the channels.
Okay.
So first of all, it is coming. So that is, I'm just giving you data that it is coming.
Right.
Now, what do they want?
Right.
What do they want is that if I do something, are you telling me in a simple term?
Right.
Number one. There are 4 things that are required. See, what is life insurance at its core? See, once upon a time, we used to have villages. In villages, what would happen? Something happens to one family, the rest of the village will come and put money.
Correct.
Life insurance is nothing
So
but
there
an
was a
organized
social
form.
contract.
This is also, life insurance is a social contract.
Or is it a financial contract?
It's a social contract also.
Okay.
Why? Because if something happens to you, your fund value is not equivalent to what is getting paid out.
Right.
So somebody is paying out
The difference.
the sum assured minus the fund value.
Correct.
Who is paying out? The other community of policyholders are paying.
Right.
Okay. So it is a responsibility for the insurance companies to make sure that you are getting in right kind of customers. There are no frauds.
Right.
Okay. And genuine things are getting
Right.
taken care.
Right.
4 things are required. KYC is required. Now it can be made fully digital.
Okay.
Okay. And most insurance company, including ours, we are fully digital.
Okay.
Second one you have to do is financial underwriting. Why you have to do financial underwriting? Not because of anything else. It's just that we should know that you will be able to pay.
Right.
Otherwise, you lose money. So financial underwriting. Good thing is that now with digital infrastructure and digital stacks, I don't have to ask you anything. I just take your consent and I'm able to pull in all your data and assess.
So this need to fill up a big form which says who are you, what is your family, did anybody have any disease in your family?
So now the disease part I am coming. Third part is the medical disclosure.
Okay.
Why medical disclosure is required? Because finally it's a social contract.
And that's
You
what
would
that is something you can't get from the.
I cannot get from the
available
digital
data.
ecosystem
Yeah. Okay.
today.
Right.
But with the insurance bureau coming in and with consent, maybe I'll be able to get.
Okay.
Why? Because suppose a fraudulent person comes in.
Right.
For 8,000 rupees, when I give 50 lakhs, so 1 is to in PMJJBY, 436 rupees, 2 lakhs of
Correct.
cover.
Correct.
400 times cover.
Right.
A fraudster comes in, he takes away 400 premiums out from good customers.
Correct.
That's why we have to ensure that disclosure is proper. So medical.
Right.
Medical, either it is on disclosure or it is on video medical or there is a medical test.
Right.
Actually, contrary to the popular opinion, we have not found any resistance in medical.
Okay.
Because many people saying that why not? Why you are giving so much of cover. I am paying you 1 lakh.
Right.
I am paying you 8,000. You are giving me 50 lakhs, 1 crore. Arey, you need to know, na? Because tomorrow if something happens, you are paying out so much.
Right.
There is no issue.
Right.
And fourth is beneficiary thing. I want to emphasize the beneficiary thing. Please tell the nominee, tell the family that you have had a policy.
Correct. Exactly.
In fact, I know it doesn't sound good, but really, you should put it on the frame somewhere that this is the policy, because I have seen that in many cases when something happens, people don't know.
Don't even know that life was covered.
Life was covered. But all insurance company, I can tell about ICICI, now we are getting within 6 months, but still we are getting only 70% of death claim intimation within 6 months. 30%, it still takes more than a year. People are figuring out, cupboard khola, ek policy nikla.
Right.
Or at least, thank God, there is digital work, you pay premium. At that time, people say, there was a policy. Please share it with the family. It is a responsibility you owe to the family. It is not for yourself. It's a responsibility that you owe for the family. Even the corpus building is not for you. It is for the family. So, what policy you have, please. The fourth part, beneficiary, is an important thing. Put standing instructions so that you don't lose, because otherwise reinstatement is very expensive.
Okay.
See, a 30-year premium and a 50-year premium is very different, naturally.
Right.
Okay. So that you are able to pay premium, you are able to pay cover. This is a service that you owe to the family. I will say that take negative emotions out of it. Once you take it as a positive emotion, all these things, all our customers, many customers are doing it. In fact, in term, the persistency now for us is 96%. 96% of the customers are paying every year.
Okay.
So it is very high, people take responsibility seriously. And, while you talk about Gen Z, our experience is that, yes, Gen Z, they want to live life, but they're also very responsible. It's not that they're irresponsible.
Right.
It's not that they are irresponsible. And
So
they
coming back to digital, I mean,
Yeah.
because you say Gen Z and digital, I mean, obviously go together. So you created a almost zero-touch, paperless kind of
Yes,
system,
yes. 50
except for the medical, if I may.
So medical for certain profiles,
Okay.
only declaration is good.
Okay.
55% of our policies, ICICI approved policies today are issued same day.
Okay, issued the same day.
Same day.
Okay.
And to the advisors, our top-end value advisors, we pay commission same day.
Okay.
My question is, why should we not do?
Okay.
We should do, because if you have got all data,
Right.
your underwriting engine is largely automated, you should be able to turn it around. The other thing I want to also, thing which we have not discussed is, if you have taken a loan, please take a protection on the loan.
Loan. Okay.
Because I know India is not a high per capita country. Many people may not have surplus to have other responsibilities. But if you have taken a home loan now, imagine a situation, something happens to you, your house will go.
Correct.
And the total premium that you require will be some 80 basis point, 101% higher. That too over the EMI.
Right.
Hardly 0.05% is what you are paying every year.
Correct.
You must take it. You must take it.
Right.
And there, same day issuance of policy, and same day, we are settling claims in 1.2 days.
Okay.
The moment it is intimated, 1.2 days you will get your claims. So do not have those apprehensions with big brands that, claims don't get paid.
Okay.
Don't mix, other kinds of insurances with life insurance. Life insurance is quite clean because it's a 0-1 situation. It's not like health.
Right.
0-1, you really get your claims back.
So again, coming back to this digital piece, there is a lot of data that is now available in the ecosystem. And I'm sure you would be doing a lot of analytics around this data. So two questions out here. When somebody approaches you, I am a Gen Z investor and I come on to an insurance company's website to onboard digitally. At that point of time, would you be able to do an analysis basis all the information about me that is available to you, either through different sources or what I provide, to tell me that this is the best product for you?
Yes.
And therefore you should be buying a term life with a term of 20 years or 40 years or whole life or whatever it is, and this is the kind of cover you should take. Do you leverage data to do that? That was one question. And the second question was about these frauds, because you were saying that obviously somebody could onboard just to defraud the system. But then there is so much of data available today that when somebody like this actually onboards, are you able to then use data capabilities that you have to figure out that is this guy somebody who's onboarding to defraud our system, or is he a genuine customer?
Correct. So there are two questions, very, very, very important questions. First is that we take consent, and after that consent, we are able to do the product recommendation.
Correct.
Our experience, however, is that largely people know what they are looking at.
Okay.
So, Gen Z particularly, they are looking at protection.
Okay.
Second, they are looking at their protect and grow, which is the high sum assured ULIP.
Okay.
Okay, they are not really looking at retirement, they are not looking at annuity. So those are or balanced type funds. They are not looking at that.
Right.
Rest of it they want to go for, because they have large appetite and they have long runway. They think that I should go for higher returns,
Right.
higher return product, probabilistically higher return product. So that is one thing that is. So that we are able to do. Which is why we are able to 55%.
Make recommendations to them, but do those recommendations actually match what
in term they
themselves
match, in term they match, in protect and gain they match. On the others, while they don't pick up those products, frankly.
They don't pick it up.
So that has been our experience. They don't pick it up those
Right,
products.
okay.
On the frauds, I want to just say that why frauds are important. Because if there is a fraud, what happens? The premium for everybody else will go up.
Exactly.
So it's a social good.
Right.
It is not, for you or for you. This is not like a home loan that if a fraud happens, your home loans will not increase.
Right.
Here the fraud happens, immediately premiums will increase. What we have done, now we have got 7 patents
Okay.
7 patents. They are patented. Now we have patented it on frauds,
Right.
on
For
persistency, for prevention of
Right.
claims,
Okay.
bad claims,
Bad claims. Okay.
bad claims. And our early claims is best in the industry and it is coming down very sharply. The other thing I must compliment Insurance Bureau, that Insurance Bureau in the last 2 years have really come off the curve. The data that is going in is good quality and we are also able to figure out the bad elements and cut them out
Okay.
at a micro market level, at the agent level.
So you have a central repository of
Yes,
data,
yes.
and you
And we are
could
using
draw
it very
on that
well.
to sort of prevent fraudulent sort of people entering
Our
into the system.
premiums in India on term is lowest in the world. Is lowest in the world.
Okay.
Okay, because our cost structures in general, Indian cost structures are not bloated cost structures.
Correct.
So we don't have to pass it on.
Right.
The other thing that all insurance companies are working harder and harder and harder, and we are also working very hard, is to cut down on your cost. Because you cut down on your cost, you can price your products
More
better.
competitively.
Yeah, you can price it better.
Right.
You can give more to the customer for the same thing.
Right.
Give more. Because see, ultimately the product that it is sold.
Right.
Since you said it is not bought. Basically, they are buying a service and we are selling a service.
Right.
See, protection is a service. It is a responsibility. Corpus building, not of the high return variety, but otherwise corpus building is a service because you protect yourself against.
Right.
Protection, responsibility. These are the words that must be associated with life insurance. Very high quick return with high liquidity should be associated with other segments of financial services. All segments are important. It's not that one is good or one is bad. All are important, but they have their roles in the financial planning of a family.
So let me come back to annuities, because you did mention that when you're looking at Gen Z and Gen X, not too many of them are seriously thinking of buying annuities today, and they're postponing it for a future date. Now, but it's also very right that we need to protect ourselves from living too long.
Yes,
That
yes,
is also a very, very important thing that somebody needs to protect themselves against. But problem with this annuity space is that maybe it doesn't excite people too much, because you're really not protecting yourself against inflation unless you take these step-up annuities,
Yes.
which you mentioned. The second is that though there are annuities available, it is sometimes very difficult to make these decisions. Now, do you want an annuity with return of premium? Do you want a whole life annuity? Do you want to have a joint annuity? Do you want a step-up annuity? So how do you equip individuals to take this decision?
So I'll tell you what customers are doing.
Right.
Okay. Customers essentially largely take what is called joint life. I'll tell you what is joint life. It's a responsibility product. It's a responsibility product. That, you give me monthly income till I'm there. If I'm not there, give it to my spouse,
Right.
because they also need to do. When both of them are not there, you give the total lump sum that I have given you to my nominee.
So it's a joint life return of premium.
We can call it joint life return premium. I'm just saying how customers think.
Right. Okay.
That जब तक मैं हूँ हमको पैसा दीजिए.
Correct.
When I'm not there, my spouse should get the money.
Right.
When both of us are not there, then my nominee should get the money. Clean. So they solve 3 problems. One, till I'm there, my income is coming. When I'm not there, tax-free legacy is happening.
Right.
Second is a very interesting thing. Businessmen. Now businessmen are born. So this kind of annuity, largely of the salaried kind, are bought, at 60 when they are retiring, or near 55. They build up a little bit corpus by annuity. There is another interesting.
Bought by salaried employees
Salaried
who are
types.
now retiring.
To allow retiring, because I will have no other income.
Okay.
There is a very interesting, segment which comes, which is businessmen.
Okay.
Now they don't buy annuity at 55, 60 because they are working.
Okay.
They hang up their boots at 65, 70 when their children have now come into business.
Right.
Now they are saying that, look, yaar, I have a corpus. I cannot spend this corpus in my lifetime. So I will buy an annuity. So what happens? I'll buy an annuity, I'll live for 5 years, 10 years, 15 years. Till the time, because risk of living long, till the time it is there, I'll get annuity. And when it is not there, I will give it to my children.
Right.
So they buy, so now they are buying children by children annuity. One corpus for this child 1, another corpus for child 2, another corpus for child 3.
Right.
Because now they are saying, passing on this real estate, 1 flat and 1 building and all, children don't want.
Correct.
They're saying, मैं तो US चला गया, now I've gone to US, I don't want your वो.
Right.
Now in Bombay, I don't want in, let's say, Ville Parle, I
Correct.
want in Worli now. People are saying Worli, I want to go to Colaba.
So they want a
immovable
financial
property.
legacy.
Immovable.
Immobile.
Immovable they don't want. They want movable.
Right.
They want tax-free.
Right.
This is the big trend that we are seeing, that people in the business side
Are using it as an estate planning.
estate planning and money. Till I am alive, I will enjoy that money. I will not give it today
Right.
to anybody.
Right.
My children, they have come to the business, let them run business. I will enjoy the money. And what are they doing with this money? Because they are otherwise wealthy. It's not that they require. Vacation. Biggest is vacation. Personal vacation, weddings. Because they are at an age where all weddings, so gifting.
Right.
Second. Third, medical.
Okay.
So many of them have actually bought 50 lakh, 40 lakh, 50 lakh corpus. And they're saying, okay, 6%, okay, 10,000, 20,000 rupees per month. Anyway, I'm spending on medical. Ye medicine kahi to. So they have done, so like that now they are buying. So gold based.
Okay.
So this
your
corpus.
annuity buying is also become
Gold based.
Okay.
No, the people who are saying that this is for the driver. So this was corpus because I don't have to spend. वो पैसा नहीं आता रहेगा.
Okay.
This is for the medical. Okay. This is for vacation. This is for wedding gifts.
Okay.
Okay. Then I will live my life peacefully.
Okay. So let me ask you a question about the investment challenges in life insurance, because we both of us come from the investment side at some point of our career. What are the big challenges there? Obviously asset liability management in a market ecosystem like ours is going to be a big challenge, because your liabilities are very, very long dated, but you don't have those kind of assets available in the Indian markets today to a great extent. And even if they are available, they would be all low interest government bonds, which you will have to tie yourself up. The second is obviously interest rate volatility, and interest rate volatility has to be hedged against simply because you are now giving these guaranteed products. So those are the two that come up top to my mind, and from an investor's perspective, these could be very, very big sort of issues if any one of these goes wrong. So how do you in the insurance industry actually address these problems or any other problems that you see in the investment of insurance funds?
No, excellent question, Sashi. So first of all, world over, which is why guaranteed product, people buy guaranteed product from large institutions. People don't buy guaranteed product from, institutions that don't have a legacy of large trust and all. So first of all, because of this issue, because back of the mind. So think of it like an iceberg.
No, if I may just interrupt you, but anyway, there are certain capital adequacy norms, right?
It is there. It is there. Still.
Whether they are big or small, that
Still, because these policies are 35, 40 years long.
Right.
So people generally buy it from large institutions.
Right.
Second, think of it like an iceberg. So what you are able to see is guaranteed.
Right.
So you are taken care of.
Right.
Now, how do you do the internal wiring so that you are able to give the wiring?
Correct.
So there are two things that one does. One is, you buy long term. So RBI over last 10 years, they have understood the need and they have come out with 50-year bonds and 30-year bonds.
Correct.
Earlier when we were younger, it used to be 10-year bond only,
Right,
as you know.
exactly.
Now the 30-year and 50 years come essentially for pensions and for insurance companies.
Correct.
You buy that, and there is another thing that you do, because the premiums come over a period of time.
Right.
But you are giving guarantee today.
Right.
So we do something called a bond forward.
Right.
That we fix the price today only.
Right.
And we keep buying the bond as and when the premiums come.
Yeah. So is this FRA market, the forward rate agreement market, a deep market?
It's a deep market now.
Right.
It's a deep market.
Right.
And the good thing is that both regulators, because here both regulators have to work very closely.
Right.
First of all, understand that there is a need for guarantee over a long period of time. Because as you know, most other asset classes, financial asset classes, don't give any guarantee.
Right.
There is no substitution of these products.
Right.
Banks are not able to give guarantee because their assets are not like that. Mutual funds are not able to give guarantee. The pensions are not able to largely give guarantee.
Right.
So you have to construct this guarantee for the social security of the country.
Correct.
Okay, because it's a vulnerable situation. No? You can't have too much of volatility on the income. Yeah, suddenly I'm 60, I don't have any other income, this tanks. What happens?
Right.
So bond forward and FRAs with GSEC, government securities.
Right.
That's how you make it guaranteed.
Right.
And that's how you make it also risk-free.
Right.
I must say that having seen at all regulators throughout the world, I must say hats off to our regulators, IRDA, RBI, that on the investment side, it has been fantastic. ICICI Prudential, last 25 years, zero NPA.
Okay.
It's not that India has not gone through cycles.
Right.
I want to also bring into light the volatility of interest rates. 1998, I know it is long, 1998 when I was heading money markets.
Right.
I have bought 10-year government security at 14%.
Right.
6 years later,
Right.
same government securities was trading at 5.5%.
Correct.
14, 5.
Right.
We have seen COVID.
Right.
There, it went to 8.
Right.
Now again it became, so 5 to 8.
Right.
So we think that, equities are volatile.
Right.
Welcome to interest rate.
Right.
And imagine a retired person who has, fixed it at when it was at 8%, and then when the 5-year thing happens, you have to then reinvest it at 5%.
Right.
It is shattering. It has happened to my father.
Right.
It is shattering.
Correct.
Because your inflation is moving up. It's not that your life needs are coming down. It's not like your expenses are coming down and suddenly you have a step down. So which is why these products are so important and so relevant and globally. And India, we still, you're right that annuities have not picked up that much as it should.
Right.
But it will pick up. In India, the next best I have seen is property. People buy property and put it on rent.
Right.
But Indian renters are at 2.5-3% only.
Correct.
Post-tax it is hardly on 1.5%. Even commercial real estate is at 4-5%, much lower than annuity.
Right.
Secondly, very illiquid. You can't sell it when you require. And when you sell it, it is lump sum will come. Reinvestment risk will again come because you have to reinvest back. So in India, largely it has come through the property, but as and when more professionals are coming, it is shifting towards annuity more and more and more.
Okay. So you seem to suggest that a lot of the investment-related risks are
Taken care of,
manageable, taken care of, and therefore an investor or a buyer of insurance need not get too worried about.
That is why we have so much of on solvency. We call our solvency that
Right.
are you solvent?
Right.
Are you keeping enough capital?
Right.
We have lots of things on shocks
Right.
that when interest rate goes up, equity market goes up. Will you be able to manage the guarantee that you
The
have?
stress testing.
Stress
that you do.
testing, big stress testing happens.
Okay.
And regulators also very looks at very carefully that what is the liability
Right.
that you have to discharge. Do you have enough assets?
Right.
Have you risked, hedged, and
Right.
protected those liabilities
Right.
that you are able to give? And if you are not, do you have enough capital to be able to do that? And I must say that Indian experience has been fantastic. Actually, since inception, there has been no life insurance companies which have gone bust.
Right.
While all other places we have seen some issues or the other happening over 25 years because that is the nature of the economy. Life insurance, nothing has
So if
gone
our
bust.
experience in life insurance in India has been so very good, the penetration is still just 3.2%, correct? And IRDA has put out a vision saying insurance for all by 2049. So that clearly would mean that there have to be a lot of product innovations. We need to fulfill those four things that you said,
Yes.
right at the beginning. If you really need to achieve this saturation level penetration. So how does this happen? And the second thing is that from a very selfish perspective at NISM, I would like to ask, how do we increase, insurance literacy?
No, so good question. First of all, you are right that from a insurance penetration perspective, this is one of the metrics used, which is premium divided by GDP.
Correct.
First of all, we are higher than China.
Okay.
Premium plus GDP actually is not the best metric. It is done by
Premium
MNC
divided
firm.
by GDP.
It is done by an MNC firm.
Right.
Because we are a low per capita country, one must recognize that.
Right.
If you were to see the number of policies,
Right.
we have around 140 crore population.
Correct.
The number of policies issued is 35 crores.
Are they unique individuals?
35 crores. Even if they are not unique individual, maybe it will be 25, 26 crores.
Okay.
Not more than that. But 25 crores on...
But some of them come out of the government schemes.
No, this is not government schemes.
Okay.
This is not government scheme. This is, credit.
Right.
Credit attached.
Right.
And this government scheme, PMJJBY, is after different order, which is 20 crores.
Yeah, that itself is 20
20
crores.
crores.
So
So that is a
it
difference.
doesn't include that.
Even if we include that, 2 lakh is good for that per capita, 2 lakh is not a bad cover.
Exactly.
So we don't have a problem actually of penetration by number of policies or by population. Actually, that is not the problem statement.
Okay.
The problem statement is are you adequately covered?
Exactly.
So I think the issue is, are you adequately covered? The issue is not whether you have got a policy or not, whether you have got a cover or not.
Right.
What we also see is that we are not adequately covered.
Right.
Number of policies, I think everybody has number of policies.
Right.
See, in ICICI Pro, we cover 9 crore policies.
Right.
But if you see 9 crore policies, large part of it comes from MFI sectors,
Right.
loan sectors,
Right.
then individual sectors,
Correct.
where people have bought individual products. Then employer-employee is a very big thing.
Correct.
Employer are buying it for everybody.
Right.
But at all places we see that the cover is not adequate for the family.
Right.
That is one area. So from NISM, I will say that penetration by way of premium will only go up with per capita.
Right.
See, people don't have surplus. And usko consume karna hai, he has to live his daily life. After that, this will come. But slowly, you have to keep increasing cover.
Right.
And when in doubt, remember the two-wheeler, which is costing 50,000, how much you are paying? Car that you are driving, how much premium you are paying? Versus this. What many customers are
what
doing.
you're trying to say is that the literacy part should cover insurance adequacy most importantly.
What customers are doing, I'll tell you what customers are doing, because I'm just reflecting on many customers are saying that first when they come to know that it is so cheap, what are they saying that in motor, for example, only third party is compulsory. So they are saying that I'll buy compulsory.
Right.
Of the premium that is left, I'll buy life insurance.
Right.
So you cover your car also third party.
Right.
And you cover your life also, because human life is more than the life of your
car.
So health insurance one must take, because critical illness, as I said, where even their hospitalization is one thing, which is 4 lakh, 5 lakh, 6 lakh. You must take critical illness, which insurance companies
So I'm tempted to ask this question, though I said this was my last question. You have a lot of health riders that you now attach to insurance policies.
Yes.
So you think that's very necessary for people to
Absolutely, critical illness.
Right.
See, 4 lakh, 5 lakh hospitalization, if you see for normal stuff, largely people can take care. What people get, families get broken financially, is when critical illness happens.
So you have a life cover with critical illness.
With critical illness. Okay. And young people must also, people who are in sales, etc., they should buy personal accident.
Okay.
Because it is very cheap.
Okay.
Because initial years, people don't die of natural causes. People die of accidents.
Okay, right.
So you want to optimize money.
Right.
Because you don't have surplus money. You want to optimize.
Right.
Buy health insurance little bit. Certainly buy critical illness. Okay, buy personal accident.
Right.
And buy health insurance. Then of the surplus that is left, you see whether you want to do third party or you want to do full, own damage.
Right.
Because many of our customers, when we are speaking to them, the Gen Z customers, by the way, Gen Z customers are extremely smart customers. They are doing their homework fully.
Correct.
Okay, they are doing the homework fully. So it's not that, they just want to live life. They are doing the homework fully. For every rupee, there is lots of demands. Consumption is a demand, vacation is a demand,
Correct.
Eating out is a demand.
And insurance is a demand.
And responsibility is a demand.
Correct.
Within that responsibility, insurance, then corpus building is a demand.
Correct.
So SIPs.
Right.
Okay, so actually they are doing their homework well and they are balancing well. And I would say that they are smarter than our generations. Our generation did not have internet, they did not have anything, so the knowledge was thing. And I will again encourage, when in doubt, go and read up a little bit. Responsibility, it is responsibility. If you have Dr. Google, you should do Dr. Insurance also.
Right. So in fact, thank you so much for that toolkit that you gave to
Thank you,
potential buyers of insurance, so that they could actually try and decide what they want to buy, how much they want to buy, and what are the kind of covers that they should take. And this has been a fascinating discussion, Anup, and thank you so much for sparing time to be with us.
Thank you. If you want to have crores as corpus, let it compound for 20 years, 30 years.
Right.
Crores are guaranteed.
Right. Thank you so much.
Thank you, Sashi.